Hey guys, Money with Yumi here, where I talk about anything and everything related to money and how to grow your wealth. Today, I want to talk about the possibility of a worldwide recession, what causes a recession, why you should care, and how that's going to affect Singapore, and what I'm doing to prepare myself for that recession if it ever happens, and how you can as well. Singapore experienced its worst ever recession ever since its independence in 1965 due to the Coconut pandemic, right? With an annual contraction of about 6%. In 2021, we kind of bounced back with a GDP growth of 7.2%, the fastest pace in over a decade. In my opinion, 2022 is going to be a slow recovery for almost every country in the world, especially Singapore, as Singapore gradually opens its doors for travel because having no natural resources whatsoever, we kind of need tourists and travel to open back up again, not just in Singapore, but like the rest of the world. And I think in Singapore, we are very protected by the Singapore government. They would try to offset certain costs so we don't feel the pinch. So inflation wasn't as noticeable when I was back earlier this year compared to the US. Like in California, beef prices went up like 100% compared to pre-pandemic levels. 100%, guys. It's a freaking joke. I've never seen food prices rise that high that quickly. And so in the US, it's more like a fending for yourself kind of thing. And there have been many signs that a recession may be coming. If you think about it, about what's happening in the world, that kind of makes sense, right? Inflation, the Russian-Ukraine war, rising gas prices, rising food prices, rising electricity costs, rising home prices, rising interest rates, rising prices on almost everything. I can't even think about what's cheaper in the market right now other than stocks and crypto. And yes, stocks are on a huge discount right now. That's why I've been a buyer in the market, and I'm hoping that the real estate market cools down a little bit so I can buy that too. It's still too inflated at the moment. The thing you have to know is a recession doesn't happen overnight. A recession, a correction, and depression, they're all very different. So what is a recession? Well, in layman's terms, a recession is a significant economic downturn spread across the economy that lasts more than a few quarters. So what are the main causes of a recession? I believe that there are 5 key indicators, the first being an economic shock. Think 9/11, a zombie apocalypse, and the more recent Coconut pandemic. And guys, we haven't even felt the full effects of the Coconut pandemic yet. And the second factor is a stock market crash. This happened towards the end of last year in 2021 and into this year with the Russia-Ukraine war, and we have seen stocks dropping to levels lower than March of 2020. The Dow is down nearly 15% in 2022 alone, while the Nasdaq has dropped 29%. And you know, there are a lot of people out there that believe that the 2022 crash is going to be far worse than 2008. And it kind of does feel we're trending that way, especially when the crash in March of 2020 came close to that of 2008. And right now, there are many companies that have fallen to numbers I never thought I would see again. Take Alibaba, for example. It fell close to a 10-year low. The IPO for $68 in 2014 went to a high of $309 in 2020. And then now it's down to like $87. So imagine this, if there are many small cap companies or even mid to large cap companies that are not growing fast enough or report less than profitable numbers than what analysts estimated, then there will be less confidence in the market, and this will result in a sell-off, which might then lead to some of these companies going out of business. The third factor is high interest rates. The Fed said that they're going to raise rates several times this year, right? We already saw the first rate hike in March since 2018, where rates got increased by a quarter percentage point. Federal Reserve officials voted Wednesday to lift interest rates and penciled in 6 more increases by year's end, the most aggressive pace in more than 15 years, in an escalating effort to slow inflation that is running at its highest levels in 4 decades. Then the Feds increased the rates by another half percentage point in early May. The Fed said they're doing it to combat inflation because when interest rates are higher, that means that borrowing costs will be higher and people will start spending less. This will then cause demand for goods and services to drop and in turn cause inflation to fall. But it's kind of like a double-edged sword, right? Because the majority of people don't benefit when there's inflation or increased interest rates, probably because most people don't hold assets that can keep up with inflation. They're living paycheck to paycheck, and you know what? Maybe you are too. Getting a loan is way more expensive now. It's almost double of what it was before. And can you imagine if someone wanted to buy a home or a car and now they have to hold off because of the higher interest rates? Inflation in the US is at about like 7 to 8.5% right now, the highest in 40 years. And guys, like I've mentioned many times in my other videos, I'm feeling like it's more of a 30 to 40% inflation here than what the Fed said. And the fourth key indicator is falling home prices and sales. Remember the housing crisis in 2008? Signs were showing as early as 2006, the bubble crash in 2008, and homes were still being foreclosed as late as 2014. This is a huge contributing factor, but it is also the slowest. Home prices don't crash overnight, and right now home prices are still really high despite increasing interest rates. And I do expect a slowdown for housing towards the end of the year and maybe into next year, but to predict a housing crash, I don't know, guys. I think it's hard because we don't have the same subprime issue like we did in 2008. And guess what? Rents are increasing in America. It went up 15% in 2021 alone. And I think a lot of Singaporeans don't understand that a lot of Americans are not homeowners. They rent, sometimes up to 50% of their paycheck. The last key indicator is the inverted yield curve, which is probably the most important one. The yield curve has turned negative before each economic recession ever since the 1970s, so it is therefore one of the best known recession indicators that's flashing warning signs on the economy. Inverted yield curves can reflect a rising risk of economic recession. It means a short-term US Treasury is paying a higher interest rate than long-term US Treasuries. The spread between 5-year notes and 30-year bonds inverted for the first time since 2006 when 5-year yields rose to 2.63%. Having an inverted yield curve is rare, it doesn't happen often, so analysts and investors closely watch for this early warning sign and do pay close attention to it. However, the more important spread is the 10-year to 2-year spread. If you look at this chart, we went negative in April and then went back up to being slightly positive in May. And then look at this. 1980 economic recession, one of the worst in history. The dot-com bubble in 2000, the Great Recession of 2007 to 2008, and then look where we are now. If you were not worried before, you should be now. And if you're watching this thinking like, oh, what's stuff happening in the US? It's unlikely it'll affect Singapore, then you're wrong. It's like throwing a stone into the pond and having that ripple effect, with US and China being that stone, and Singapore and many other countries being that ripple. Yeah. For example, Singapore's mortgage rate is closely tied with the US Federal Reserve rate. When the Feds cut the rates in 2020, SIBOR dropped from 1.45% to 1.21% in just a week. Or remember the global financial crisis of 2008? Singapore was the first Asian country to take a hit. So what are some obvious signs that a recession might be coming? Well, you might feel that more people are getting unemployed and looking for a job, yet not many companies are hiring and cutting back on their costs and maybe even firing people. Or that your dollar is being stretched, like what you could buy with $10 2 years ago might not get you as much right now. Or that people are cutting back on their spending and not spending as much, which would result in sales slowing down, which is what I feel is happening right now. Then the next question is, how do you prepare yourself for a recession if it ever happens so you don't get too hurt from it? First, you need to know how much cash you have. Second, what is your minimum monthly expenses? Avoid buying any big ticket items that could stretch your expenses. Third, increase your emergency fund. If you had like 3 months set aside before, increase that to 4, 5, or even 6 months. Fourth, if you have a job, consider having a backup plan like a side hustle so you have something to fall back on, or increase your skill set so you're more desirable in the job market. Fifth, you might want to reevaluate your current investments. Are your investments resilient to recession? You may consider cutting any high-risk short-term investments. And lastly, it is to have the right mindset. When people are fearful of a stock market crash, you should prepare yourself mentally to be a buyer, just like right now. It's a good time to buy, especially if you missed the 2008, 2015, 2016, and 2020 crash. We haven't had such a bad crash in a long time. And if it keeps falling, I'll just keep buying and holding. I have no problems doing that because I know that the companies I love for the long term will come out strong in the next 5 to 10 years. And guess what? There are some talks about a possible real estate crash. So if it does crash, guess who's going to buy more properties? Yeah, me. And I hope you guys learned something from this video and prepare yourself mentally and financially for a potential recession. I think that 2022 is one of the best years to cut down your expenses so you have more money set aside to invest. And don't lose out on this opportunity, guys. And don't have this mindset thinking like, oh, it might drop even more, so I should just wait, I shouldn't buy. Then when are you going to buy? That's never gonna happen, and you know it, right? So that's why I try not to time the market, because no one knows where the bottom is, right? Or if we're even at the bottom right now. Right? And let me know in the comments below if you think that we're going to have a global recession, or is Singapore economy going to fly to the moon? I would love to hear from you. And don't forget to smash the like button, subscribe to my channel, and ring the bell icon so you get notified whenever I post a new video. And feel free to follow me on my Instagram. Thank you for watching. I'll see you again next time.